Hello guys, welcome to part 2 of our 3-day candlestick tutorial. From our previous class tutorial, I asked you guys to go to your charts and count the number of times you have 3 candlesticks moving in the same direction, either bullish direction or bearish direction, to really bring out the essence of this strategy. Hope you try that out. You discover that a lot of times you find 3 candlesticks moving in the same direction consecutively, either 3 bullish candles or 3 bearish candles. This is the emphasis of this strategy. Please try and get into your charts and discover them. Count the number of times they happen and you will be amazed. Please like and subscribe to stay updated on my forex strategies. Before we continue with our 3-day candlestick trick, let's take a look at some reversal patterns. We shall look at some candlestick patterns that govern or influence supply and demand zones, or in a broader sense, reversal zones. Inside bars. An inside bar is a candlestick pattern which is formed when a candlestick opens and closes within the range of another candlestick. The bigger candlestick is called the mother candle, and the smaller candlestick can be termed the baby, or the candle which is found inside. The essence or the nature of the inside bar, why we call it an inside bar, is because the smaller candle or the baby opens and closes. The body of the smaller candle rests or stays within the range of the bigger candle. That's the open and the close are within the range of the bigger candle or the mother candle. Momentum candles. A momentum candle is a candlestick that produces a strong sell or a buy move. These moves are usually long and sustained. Market will usually reverse when they come in contact with areas that produce strong sell or buy moves or contain a momentum candle. Markets will usually reverse when they come back or retest the beginning of such moves. Moreover, we can observe that this zone still got a rejection for the second time, which shows that that zone was a strong zone. Areas with inside bar candles usually form demand and supply zones. So you always should expect reversals around zones having an inside bar. You can observe that when market returned to that area at point 2, there was a rejection, and also another rejection when it got back there at point 3, proving that that area is a supply zone, that there was an accumulation of sellers at that zone waiting to change the direction or to sell. This is due to an accumulation of sell orders from the market makers that will be waiting for buyers to bring back the market to that zone so that they can continue and complete their sell orders. So that's why market will usually fall down once it retests or touches that zone again. Our next and important demand and supply pattern is the engulfing candlestick, which is a direct opposite of the inside bar pattern. We have the bullish engulfing and the bearish engulfing. Let's look at a direct application on a live chart of an inside bar and a bullish engulfing pattern. This is still to emphasize the fact that market will move in 3 consecutive bullish candles or 3 consecutive bearish candles after a bullish engulfing, a candlestick rejection, or an inside bar or any reversal pattern. Take a look at the enclosed region, the circles. What can you identify? This is a direct application of the inside bar. So look at the first green patch. We'll find that this is an inside bar that produced a reversal to the direction, a bullish movement. That was a bullish signal. And the second, the second encircled region, which is the bearish engulfing, you will notice that market reversed after retesting or returning to the area that had a bearish engulfing. Support zone. You see a support zone where we have a tail. Once market returns to that zone, you should avoid selling. Majority of the time, what you will get in the market are false breakouts. False breakouts are always on the rampant move. After market tested this zone, the following candle was bullish. That's candle 1. Candle 2 too is also bullish after candle 1, moving to the bullish direction. Candle 3 too is also started as a bullish candle, since the market opened above the close of the second candle, but later ended up being bearish. This introduces us to the concept of momentum. Once market momentum changes direction, you should always follow momentum. The third candle closed up with a long tail, and the body of the candle is bearish, dark, which shows that the first two candles, which were bullish, moved with strong bullish momentum, but that momentum died. That force with which the candlesticks moved upward later on died. So you should start thinking of selling. This doesn't necessarily mean you should start selling the next day once you saw a rejection on the third candle of the previous day. Let's say on the fourth day you just place sell automatically. You can do that, but at times I always wait for confirmation. Some days when I see a reversal candle, I don't just place a sell trade. I always wait for confirmation. Was that rejection caused by a resistance zone, or is it just a retracement? We shall look more into that. When a daily candle closes with a long tail around a zone that had also given a tail during a previous market session, like on a daily, you can find here that there was heavy rejection on a zone that had previously shown strong bullish movement. See, on this zone there is a bullish candle that had moved here with a very strong momentum in the upward direction, and after market came back to that area where there had been a rejection, it got rejected again, which means buyers are full in this zone. There are a lot of buyers in this zone waiting to buy. So we can safely say that on the third day of this move, the bullish momentum was weakening. Momentum is a force with which market moves in a particular direction. If the market moves with a strong force upward, that's the candle closes with large bullish bodies, it means that the bullish momentum is strong, and it is the best time to join the trend when the momentum is strong. Here we have day 1, day 2, and day 3. On the third day, the market finally closed bearish, which shows that bullish momentum, which was powerful before, has died down. The market is either regressing to gather liquidity down, or it is finally changing direction. So you should always take profit. Always set your break-even plus accordingly, or trail your stop loss to move into profit zones so that markets doesn't take your money on the table.